What's up? I'm back at it. You already know. Um, all I'm going to do today is just talk about the markets and where we're at and what I think price is going to do based on what we have. It's just reading the tape. That's what it is, reading the story of what price is doing and predicting what the next chapters are going to be. And with that being said, we always start with the higher time frame, as your higher time frames are your parents and the children follow what the parents do. So your children are going to be the smaller time frames, your hourly 15-minute, 1 minute chart. It all plays the same part of what price is doing. 1 minute, our daily candles can't form without a lot of 1 minute candles doing their thing. Um, and to put that into perspective, an hourly candle can't form without 60 1 minute candles. You know what I'm saying? So um, that's the beauty about the market is that time is fractal, and we get all of this based on time. Time is the most the most important thing you'll ever have. Outside the markets, inside the markets, sideways of the markets, time is all you need. Time determines so much and it heals and it destroys and it all revolves around time is what I'm trying to say. And I spent a good amount of time trying to learn what the algorithm is, what why it runs the way it does run, and it's all about time and price. If you know that, you're if you know that going forward, you're in the right direction. And if you already know what the algorithm is and how it functions, like it's the back of your hand, then hey man, kudos to you. Why are you watching this video? Go do your own stuff, bro. Um, these are for people. This is for people that are still learning and aren't very comfortable with riding a bike on their own. They still have their training wheels, and I'm your training wheels. And I'm gonna point your attention to the right things and give you the best insights that I have from my year and a half of training experience. So, with that being said, we have the ES S&P 500 futures market on the left, and on the right we have the Nasdaq 100, both E-mini. These are the micro contracts. I only trade the micro contracts, um, but Nasdaq's always going to be on the right, ES is going to be on the left, um, and this is just how I do things. So we'll start with ES. Nothing, nothing at all that I'm interested in ES. There's not one single thing that I'm gonna be ready to take a trade on ES in because if you look at the weekly time frame, all we have is just a singular high, which is an all-time high, as well as the previous week's low. Um, that respected that this candle's opening price right here. That's a bullish order block. See how price wicks that um, and closes way above it. I'm pretty sure this closing price here. So we can go to the high of the candle because that's what I watch in order blocks. It's the high. So this H number right here and the O. And then if you take a Fibonacci and you go measure the range of that whole candle from the high to the low, like that, I take that 0.5 level, which is the midpoint of it. That's the mean threshold of order block. But yeah, so this candle comes in at 52, 53 and a half, and this candle's closing price is 52, 53. So it closes just beneath it, um, but still respecting it. If we do get past this candle's low, I really like this weekly candles low as a draw on liquidity, but we have to get past this candle's wick consequent encroachment, and that is this midpoint from this candle's closing price to the low at 5,222. So I'll watch this as well. Put it down a couple more. Bada bing, bada boom. Like that. So I'll watch that. In NASDAQ, you're right there. My camera's not there anymore. It's right there. NASDAQ, it's things are getting fiery in NASDAQ, nice and fired up. We have relative equal highs right here that I'm really interested in, but also there's so much juicy liquidity on the downside right now that I think it's long overdue that we need a rebalance back down lower. And I think we are primed up for that opportunity, especially um, where we're at in the year, April. Um, we need to have a little retracement before come summer. Because summer we like to make our high of the year or make a predominant high. Um, And so right now would be the perfect time for price to drop lower after all these weeks of consecutive upside delivery. We need to see a couple pink candles, right? So we have these relative equal lows right here on the weekly. I see this remaining fair value gap because price does like to rebalance the inefficiencies that it creates. This right here is an inefficiency in price from this candle's low to this candle's high. That whole inefficiency. Um, I always note the high, the low, and the midpoint, which is this black line right here of these inefficiencies. You can see how price respects that consequent encroachment, which is just a fancy name for the midpoint of that imbalance. Before taking off higher, comes back, retests the high end of that, goes higher. Um, so this is what's left of that fair value gap right there. So I'll keep that right there so I know this black min line is my midpoint of an inefficiency. Um, but yeah, here's another example of another inefficiency where price came all the way back down, filled the low end of it, returned higher. But in the more near term, because that's all I'm talking about right now, this is what I'm interested in. We'll drop into a daily chart now. Um, you can see my ICT candles. Yeah, let me change these real quick. Hold on. Because I'm not ICT. I'm Slim Trading. Zachariah. Pink and white. Yeah. Little Frank Ocean. Pink and white, no Frank Ocean is what I mean to say. All right. Let me pause. Realign. So ES on the left again, all-time high, last week's lows right here, sell side liquidity. This is the daily fair value gap that I'm watching from this candle's high to this candle's low. You see how we respected the midpoint kind of, came back up, rated this week or rated this daily high, came back lower, respected the low end of it, and then this candle right here, we finally close underneath it. We come back up to the consequent encroachment of that same fair value gap, and look how we've been respecting it so far. This is why I'm kind of a fan of lower prices at the moment, just because of how we're respecting these PD arrays. Um, Nasdaq, Nasdaq is beautiful. Yeah, so I didn't do any annotations, but I'll just do them with you right now because I mean this is what any trader does, right? Just technical analysis, right? And yeah, so same fair value gap right here. Let me get out of this. I always keep my set on off. I never have it on blue. Um, it's just the settlement price because these candles either close at 4 o'clock or 5 o'clock. If you have it on the normal set, it closes at 5 o'clock. If you have it on, you'll see the closing price at 4 p.m. versus 5 p.m. or 4:40, 3:59 versus 4:59, something like that. I can't remember. Yeah, no. Wait, which one's which? I don't remember. I'll make another video for that if you guys want. Um, right now, I'm just kind of recapping price and what I think it's going to do. Relative equal lows right here. Really interested in this as well as the remaining inefficiency from this candle's high to this candle's low. You see this right here? I'm going to take what remains of that right here, extend it forward, and we'll put it in brown. No, that's freaking ugly. Yeah, that's nice. Whatever. Yeah. And then we'll annotate it daily BC, and we'll take out the middle line too because I'm not concerned with that. All right. So in terms of lower prices, this is what I like to see. Um, I'm also going to be watching. Well, I do have this already set up on this last chart right here, which I'll come to, which is where I do my 1 hour and lower um, analysis. But I just wanted to bring this to your attention on the daily before I drop into that. Not a busy anymore. It's an inversion for value gap. Notice how once we close, we go right back up to the consequent encroachment. I mean, look at the precision, bro. Come on. Right to it, and we close underneath it. This candle respects the wick consequent encroachment of this candle's high to the closing price. And yeah, very uneventful day on Monday. I mean, all right, I'm not gonna say I knew that this was gonna happen, but I knew that I could take the day off from trading and do things that I like to enjoy because the chances of a daily high or low rage were unlikely, especially on a Monday. They like to just chop people up. And all I did was scalp short-term highs and lows. It is what it is. I'm not interested in that. I'm interested in the big moves and where price is going on, where price is headed on a higher time frame perspective. And so I'm mainly interested in that. More short term, I need to see price go beneath this candle's low from the previous day, right here. And when we do get there, it needs to bleed by, just like how it happened on Thursday of last week. I'd love to see just a huge bleed right into this inefficiency. Um, yeah, I'll also note this candle's low as well. They're about 35 handles within each other. So, yeah. So that kind of wraps up, what I'm looking at on a daily perspective. Still got 4 days left of this week. And then, yeah, I'll be watching how we trade because I'm interested in both sides. This buy side liquidity pool, that's an all-time high. I'm not really interested on that in a short-term perspective. Um, I'm really, really interested. You see these right here? You see these wicks and how they're all really close to each other? This on a on a smaller time frame is going to look exactly like relative equal highs. They just look like, wicks and stuff headed down lower, but this is what I mean when I say price is fractal and it's a high frequency trading algorithm. Thank you, Michael. Um, is that you know that these are relative equal highs on smaller time frames, and so you know that the likelihood of price coming back up there is very likely, just to wipe out that liquidity and keep the table fresh. But yeah, so I'm really interested in 18,626. I've been interested in it for 2 weeks now. I caught it out at the beginning of last week. This week I've been very interested in 17,949, which is this candle's low right here, or this candle's high, but the low end of the daily BISI. And yeah, that's about it for the daily perspective. I'll try to keep this one short. I don't know how long I'll yap about it. Try to keep it under 20 minutes though. Dropping down to the hourly, I kind of skipped the 4 hour chart. Not really a big fan of it, but and the only reason I say that is because I don't need a 4 hour chart to see where I'm at in the time price continuum. All I need is an hour chart, and I can see exactly where we're at, like Monday's opening price, the new week opening gap, all that stuff. So, see, I don't even know what this is doing here right now. This is just from the daily, huh? That's so interesting to me because you can grab that. All right, so it should be over here. Oh, okay. Yeah, so it's the same number. Just trading view, putting it on something else. Anyway, so if I zoom back out right here, bro, these are the all-time highs. This is ES. This is the one I'm not really interested in again. Remember. So yeah, not too interested in that. I'll make sure to mark all my annotations just because you have to. And yeah, that's really all I'm interested in ES. Like I said, I'm not really looking forward to taking any trades here. Beautiful respect of that consequent encroachment right here. See how we come up multiple times. You see Monday's candle was a bearish candle, so it might be power three, take off to the upside. In that case, in that scenario, I'm going to bring your attention to the NASDAQ. I'm going to go full screen mode so you could see. Um, so you see right here at this candle, I'm on an hourly time frame, but I'm going to show you the exact levels I've been talking about this whole video. Just to prove that there's a time and price continuum, and all you need is time and price. Um, this candle right here is the highest we've ever gone, and that's going to be 18,708 and a half as of April 8th, 2024. Here's this buy side liquidity pool that I was talking about where we have relative equal highs. Right here we came up, came just short of it right here. There's more relative equal highs, but um, on a weekly candle, that's gonna look like just a high. So we have relative equal highs right here, but this is just on a daily candle, you're only gonna see this number right here, 18,611 and a half. So that's gonna be last Monday's high. Let's go to the 31st or the 30 or the first of it. Yeah, it's gonna be right here. 18,611 and a quarter and 3/4. 18,611 and 3/4. Same thing. Um, and then yeah, above it we were bullish. We had a bullish candle. That was the high that was created on Monday, and then came all the way lower on Tuesday. That was a good day. Um, Came all the way back up to knock out these relative equal highs on the hourly chart on Thursday, and then bled right back down on that same day. This was a crazy waterfall, which I actually got destroyed on. Not destroyed, but I thought that we were going to come up higher to take out these relative equal lows at that moment. So I was trading in that direction. And then sure enough, got punished. Not punished for it, but was on the wrong side of the train. And it just kept on bleeding lower, man. Um, I took 3 losing trades here. Only lost $60. It's fine by me. I made well, it's yeah, I mean, you can go watch the videos. I'll tell you. They'll show you how much I made, but 90 on Tuesday and then 40 on Wednesday. Took That was just 2 trades. Took 3 losing trades. Didn't lose as much, and then made that right back on Friday with another 100 ball. Um, yeah, so it was a good week. Was able to string together losses and keep my cool. Um, and that's what being a trader is about, you know, because every time you push that button, you're assuming risk. And if you can't string together losses, then you're not going to be profitable. I mean, at least without managing your money correctly, is what I should say. And so, yeah, um, your winning trades definitely, they always, I don't stress about all right, my mind is racing too fast right now. What I'm trying to say is I don't stress about my losing trades anymore. I do stress when I break my own rules because that's when you allow yourself into pits of despair. It doesn't end to anything good. And I mean this when I say this. Do not let yourself break the rules. If you break the rules, you go to jail, bro. And it's not a good jail. It's a psychological jail that messes you up. And it's a lot of scar tissue, a lot of damage that you have to weed out. And so if you create those bad habits, if you allow them to define your character, especially as a trader, it makes trading that much harder and the end goal of profitability seem that much further away than what it really is. I noticed how good of a tape reader I am and knowing where price is headed next, but at the end of the day, none of that mattered to me unless I made money. And so that's why I need to keep these rules in place, such as no more than 3 trades a day, not risking more than 2% in any trade. And some trades I only risk 1% because there's no need to risk because that's basically my full port. Going a whole 2%, that's a full port with all of your capital. Options, it's a little bit different, but futures, I'm using my whole account and only risking 2% of that account as a full port. If you're risking your 100%, I mean, you shouldn't be trading. Um, yeah, you shouldn't be trading. But anyway, solid risk management is what's going to keep you afloat and going to keep you in this business long term. So back to oops, back to the topic at hand. What the fuck is this? I'm on the wrong one. Hold on. All right, I guess I don't have a hotkey for it. It's fucking weird. Excuse my mouth. Um, Back to what I was saying. All-time high, relative equal highs that I was talking about right here. And then short-term wise, we have last week's open and close, or new week opening gaps, and this week's current new week opening gaps. We've been trading in between both of them. Monday was a stupid inside range day. Glad I didn't trade anything. There was a market maker buy model that occurred exactly at 10:30. Shout out ICT, um, but I didn't participate in it, and I'd rather not. That's not my style of trading. Um, I like to attack previous day lows and highs. Intraday trading and short-term scalps, um, that's not where I thrive in. So I'm not tripping off that, not taking that trade. There's gonna be plenty of more opportunity throughout the week and better setups for me to risk live money on. So that's fine by me. Um, right now it's 2 o'clock in the morning, New York Eastern time, and what I'm going to be measuring is this candle's low all the way to this candle's closing price. That's going to be our weekly low of last week and the close of last week, and so that's our consequent encroachment of our tail right here at 18,177 flat. We'll put it in black. Boom. Oh, kind of forgot our annotation. Sometimes my mind moves too fast for my body to keep up, aka my tongue. But yeah, if I go here and I just take this little Fibonacci, this is the weekly chart now. Um, go grab that, get it out of sets. It's not the same number. Why is it not the same number? The low's at 18,053 and a half, and the closing price is 310 and a half. 310 and a half. It's right there. What? How does it come out to two different prices if it's between the same 2 points? Um, excuse me? Oh, that's because this candle's closing price is, wait, what? Why does it have it at, what? What? All right, now it's the right number. I guess it just didn't lock on to the right thing. Bro, that had me so spooked for a second. What the frick? Come on, TradingView. Get it together. But yeah, there you go. 18,177 and 18,177. So this is what I mean by say I could see weekly and daily um, time frames based on an hourly chart, um, because I know how much time these candles represent, and all I gotta do is grab one of these points to find out what I'm looking for. And if you don't know what you're looking for, because these terms might sound foreign at first unless you've studied a lot of ICT, go to ICT's YouTube channel. I mean, he teaches for free. I teach for free. I'm speaking for free. I mean, the true cost of what it's going to cost you, the true price of what it's going to cost you, I said that backwards, um, is your time. Are you going to spend time putting the work into this so that you're free from the time that you give your 9 to 5? Or are you going to slack off and just watch TV and chill, watch TikTok, and do that for the last couple hours of your day or first few hours of your day before you have to go to work? You know, um, it depends on how bad you want it. Are you going to sacrifice the time needed so that you have more time in the future, or are you just going to be content with where you are right now? That's a question for you to answer. I already know the answer to that. That's why I'm here, and I'm going to continue to do that because I'm nowhere near where I want to be. And it's a constant pursuit of putting that work in. Um, I know my time here is not forever, and so I'm going to be very happy about the work that I do put out into this world before I leave it. Um, and you should do the same. I mean, we only get one life before we go back to Him, before we go back to dust of what we were created from. And it is the gift of God that you should go and enjoy the works and your labor of what you're able to accomplish, what you eat, drink, sleep, all that good stuff. Um, for the toil that we do spend on earth. Your true reward is your woman, wifey, if you out there. I love you. But I don't know if who you are yet. I, I just had to make this video weird. Um, I know who you are, but you're not in my life right now. So anyway, I might sound crazy. I am. but I can also tell you where price is gonna head next. So pick your poison. Um, with that being said, I told you exactly where I think price is headed. I'm watching this weekly tail consequent encroachment line. Um, we have yesterday's low right here. Uh, when we get here, I want to see speed and distance past it, not just a wick, kind of like how this wick, what we got beneath this candle's low right here. It was just a rate on liquidity. I want to see closing price beneath that level, and then ultimately a closing price beneath this weekly tail consequent encroachment. When we get there, like I said, I'm executing in the direction of 17,949, which is lower than 18,313, which means I'm going to be shorting. And that's probably going to be at sometime between 9 and 11 a.m. New York Eastern Standard Time. When we come back up, I'm interested in 18,626. And yeah, I'm going overboard with this video. I don't want it to be 30 minutes. I just want it to be kind of light. So um, yeah, I'm pretty sure I said what I need to say. When I want to said what I wanted to see in price, what I want to see in price. I'll come back and review it tomorrow or something. Um, should they play out, um, and they will. So, all right, it's enough for me. Go to sleep. Enjoy your day. Have a good one.